Hi, I'm Don.
And I'm Lori. And we're
Talkin Divorce.
Welcome back to Talkin Divorce with Don and Lori, and to part 2 of our discussion on protecting what comes next after a divorce. If you missed part 1, we explored how updating your legal estate plans can prevent major headaches later. And today, we'll look at financial recovery, homeownership decisions, and how collaboration among professionals helps clients move forward with confidence. So let's jump back in.
So Michael, you're bringing up something, given your financial acumen and all of your experience, there are situations, believe it or not, where people that are divorcing decide they want to continue operating businesses together. They want to own businesses together. And to me, that always begs the question, if you couldn't continue to be married with this person, why do you think you're going to be successful in business? But putting that aside, there are certain things that have to be done, after the divorce when that happens. And it does happen, Lori. Every once in a while, we get clients that want to run businesses. I have one client that says, look, I can't be married to the man anymore, but man, he's really good at what he does, and we're just perfect. We've built this empire, and I want to continue with that. So my advice generally, and if you could chime in, Michael, is that go see a business attorney. Let's get some partnership agreements written up. If there's intellectual property rights that are involved, I'm going to get you an IP attorney to talk to as well. And this is, again, going with, we need more people at the end zone here, right? Because you're bringing in a fresh new team that's going to be able to really finalize your divorce. And you have to do that because, believe it or not, the family court's not going to micromanage your business for the rest of your life. They're going to say, look, you made a deal with the devil. If you can't get along and he's screwing you because he's done some business things that are, deceitful or whatever, don't come crying to me. So we need some agreements, and only a business attorney could do that. So what are your thoughts about that?
Well, again, if they're Schedule C or they're a corporation or they're a partnership, do they have LLCs? Do they own property together? Are they going to keep these properties because they didn't want to liquidate them? They're getting rents. They're getting all that stuff going on. And that's the valuation of what the business is worth.
Yeah.
And it's also, if he or she is operating the business, part of it, are the books actually the right books, and do you need forensic accounting? All these things go into play to understand what it is you're doing.
I thought the divorce was over with. You're talking about forensic accountants again? Yeah. But it's true, though. I mean, what you're doing is you're opening up a whole new thing. Now, of course, they're supposedly cooperating at this point, right?
Supposedly.
Okay, and hopefully they are and stuff. But, I mean, it's like, give that some thought. I don't care how good of the business was, but it could be a real...
But see, on the income side, I'm looking at what the percentage of ownership is. Is there a K1? Is 140, 60, 30, 20?
Right.
If they're under 25%, well, they're not really an owner. It's under 25%. So now all of a sudden they're an employee of that business rather than an owner.
Of the other spouse?
Yeah, because if I did an application and said they were owner at 25, no, they're not.
Right.
Because they're not over 25%. So now they're really an employee, W-2 of that corporation. They may have 25, got the K1 to fall through, need 2-year history. But all of a sudden, those percentages matter. So now a loan officer technically, we just gather the info. And they wait for someone to tell them they're wrong. But see, I have an underwriting background too, so that's good and bad, because I look at things a little bit more carefully up front, but then there's no conditions. And then the conversation actually exists correct, rather than exposing something that creates more problems.
Yeah, so Lori, that's why even before the divorce is done, right at the final stages, it's like, don't count on me, the divorce attorney, to be able to handle all these things.
No.
I don't know of a divorce attorney that is that well versed in the law that can do that. So you need some really good people like Michael and other folks to be able to sit you down and say, is this really in your interest? A lot of times, I can't give my clients that information. I've got to say, this is your decision. Right? You go talk to the experts here and then come back to me and let me know. But I'm going to tell you right now that it doesn't sound right, but you go talk to somebody like Michael. And that's before it's done. And when it is done, then you go and you have to, follow through with what you've agreed to.
Right, because you can do a trust, but if it's not funded, it doesn't mean anything.
That's right.
Hey, I got a great trust, but nothing's in the trust. Right. And that's a problem too. And we find that also when people are looking to do a loan, They can close in a trust. Lenders are a little bit better at that these days. Back before, well, we'll take it out of the trust and we'll put you back in. And then, God forbid, you put them in a bubble wrap for a few days, But, you got to understand what can and cannot be done, but it's getting that right advice and information and taking for what it's worth and using life experiences. The 38 years I've been doing it, I've seen a lot of people make good decisions, bad decisions, and you kind of take all that experience and try to give the best information possible.
Yeah, and I think a lot of it has to do with change and just having, going through all that and just getting your mindset right to move forward with these decisions. And it's a lot
They're in the fog. They're in the
for
clouds.
one person to take on such a huge responsibility. So I think it's perfect to have, professionals in advance, like before you even start the process, just so you know what you're working with. You can never start too soon, right? Building a team.
Yeah.
Because ultimately you're protecting yourself and your legacy, right? Mm-hmm. Mm-hmm. So,
unfortunately, people I think that go through divorce sometimes are like, I can't talk to another lawyer ever again. They get a lot, right? It does. So, but it is important. It's just hard. It's just hard. It's not the lawyer's fault, but it's.
Well, let's be real here. Going through a divorce is expensive. A lot of us can't afford a divorce, so we stay married, right? But the truth of the matter is that it's going to be financially hard for people, and that scares people, right? Mm-hmm. And so they don't want to sometimes take your advice to go and see special people or hire the experts that you need. In a divorce, I always start off with, look, we might need a forensic accountant. How much is that going to cost? Well, it's going to cost possibly as much as I'm going to cost you. So take my fees and double that, okay? We're going to need an appraiser. We're going to need a mortgage broker. We're going to need you to talk to an estate planning attorney, so that's why people make bad decisions. A lot of times they think that they could do it themselves, and they want to be a penny wise and a pound foolish, and it's hard to tell people, look, it's going to be worth your while if you talk about lots of money that's on the table, right?
Yeah, or if they listen to a family friend or their best friend or
the new one. The new one is, I got something off AI here, man.
Oh, that's right,
and,
AI.
And I just
Chat
downloaded
GPT.
a marital settlement agreement, and this is all I need to do, right, Don? I'm just here to talk to you about signing this thing, and it's like, it's a little bit more complicated than that.
The thing I tell clients is, you think hiring a professional is expensive? Try hiring an amateur.
Yeah.
See where that leads you in the end. You think you saved it today, but you're going to spend tons more later on. And I see that all the time where they think they got it and they're celebrating and they did a good job. Just like you negotiated that car, and for some reason the guy's high-fiving in the back and you thought you got a good deal. What the hell happened there? I don't know. But you got to understand that. You can also with Chat GPT and all these other fun little AI stuff, if you don't specify or ask the right questions completely, it's going to give you the results that it thinks you want to hear. And you're going to be happy with those results, but are they the right results? Because, I just did my whole trust and I just did my whole, no, you're going to miss things.
That's a good question for Allie. Do you come across people that come to you and say, hey, I've done my own estate planning and I just need to brush up on this, and what do you think?
Yeah.
What do you think of this?
What do you tell them?
What I always say is like, okay, if that's where you want to save money, that's great, good for you. You know what I mean? It just seems like a dumb place to. It's not that expensive to do like a good professional trust. It just seems to me to save a couple $1,000s because the issue is. You're probably not going to know, but your kids are going to know. That's who it's going to hit.
It should give you questions, but not solutions. It should give you the questions that they should ask you, perhaps, or they should ask so they're prepared. But it shouldn't be the end all.
Right. Yeah. It's listen. Some of that when I first started practicing, I had a really big litigation matter, and it was all because someone did their own trust and did their own amendments, and he thought he was so clever. And really, by the time all the family members were fighting over it, most of it was gone. So he really talk about penny wise and pound foolish.
Yeah.
Wow.
One of the things I've learned from Allie is that people with trusts and estate planning ought to have it looked at every once in a while. I think you say like every 5 years. Why is that?
It's just a good time for people to take a look at it, even if it's not even if it's not the legal stuff, I mean, it's good to just make sure the legal stuff is what you think it is. But it's also good all the time. People say to me, "Oh, I forgot I did that. Oh, I don't even talk to that person anymore," So it's just a good time. And then also to kind of go through your assets and kind of make sure that everything is, again, what you think it is, Your accounts are titled in a certain way. Make sure your beneficiaries are what you think they are. The house is coming out when people are refinancing. That's real and that's problematic. Like, we just do a double check that if they have refinanced, that the property is still in the property is still in the trust.
The thing that I see happening too is, and I'll use a personal matter to this, is when I first did my trust, it was some 26 years ago, and the updating of the trust. When, let's say, my children were younger, my mom was also noted as, my mom's still with us, but my kids now are adults. You mentioned about the accounts and the of what happens to an account going not to children, but now they're 24 and 26. So now what changes there, of course, and all the considerations. But if something happened to me, my wife, my kids will do very well for a decent amount of time with the insurances and everything else there. But the thing is, it's also that distribution, so they don't get in trouble with it. And it's utilizing it for a housing item or a health item and making those items there. I've seen some people put, when the kids turn 50, I think that's a little extreme. but again, it's knowing how to set those up, because I've seen those complicated trusts doing what I do. And I observe and I go through to make sure there's nothing affecting lending. But there's various complications that are there. And it's going to somebody who's going to ask you what it is you want to do and what is it your wish, both spouses, because each of them have the same thing, that their kids are their everything.
Right.
And even though they don't get along, they need to make sure that that's correctly done.
Michael, you're bringing up something that I think Allie's very passionate about, and that is why she got into the business to start with. She feels very passionate, I don't mean to speak for Allie, but about how bad it is having to manage an estate where there's no estate planning, afterwards. So, when you talk about at the end of the divorce, how important it is to talk to Allie or somebody like her, it's very important, because someday we're all going to die, and you want to make sure that you're not creating, havoc for the loved ones. And Allie, you could talk a little bit about those experiences that people have. Yeah,
I mean, that's really the thing that you're giving your children, just we're assuming, is that peace of mind, to know that when you pass away, I've made things as easy for you as possible. It's terrible to lose a parent, and to not have anything, to not have any roadmap, to not have any planning, is just, it's just.
Well, what happens if somebody doesn't have any planning? It goes to the state?
Oh, the state will take care of it.
Okay.
It goes through probate, which going through probate is not terrible, right? We do probates all the time, and it's just that it's a court process, and so you're kind of you're not at the whims of the court, because there's very specific rules, but you're on the court schedule for sure. So it just takes a long time. So the going through probate is it's not the best thing, but it's also not terrible. I mean, in certain cases where we're getting a little off topic here, but if children are fighting, sometimes probate's good, because when the court is overseeing things, children act a little bit better. That much is true. But what's very difficult on families and children is if the decedent has all kinds of assets and they don't know where they are and they don't know how they're titled. And it might be they own a piece of property in Indiana that's a oil investment with some old partner from 20, you know what I mean? Like, and you have to go tracking down these people and where. So it's the legal process is not as hard as just like figuring out like what did dad have.
Kind of like a premarital agreement where we say we want you to account for all of your assets, because we don't want to have to fight over whether you had these before the marriage or not. So you're talking about making it easy for the family so they know exactly what the estate is.
Yes.
But isn't it more than this, Allie? Isn't it also true that, if you die without a will or a trust, then the probate code kicks in?
Yes.
Right?
Yeah.
And then that person that the code says your property should go to is going to go there, whether you like it or not. And let's face it, and there's people that are possibly within that scheme that you want to eliminate. I mean, there might be some bad blood there or whatever. And especially, in the case of a divorce, when you're dealing with lots of emotions and relationships are kind of getting hurt and bruised along the way, it's probably good to get an estate plan and make sure that it's going the way that you want it to.
Definitely, yeah. I mean, and the rules of intestacy, which is the probate code, how it goes. It's kind of what you think it is. It's to the spouse first, then it's to the children, then it's to the grandchildren. But to Don's point, if you've got, if you've got a child that you may be estranged from, or that maybe doesn't, some families are like, oh, that kid is fine, but this other kid,
How about
maybe
a mother,
has special needs
and
or-
a sister that's taking the side with the ex-spouse?
Yeah, exactly. Yes. I mean, that you definitely.
Well, I've seen it. I mean, on a personal note, when I was younger, and as I've been doing it a long time, I was doing fairly okay. So my grandmother saw that I was doing okay, but some of the other grandkids weren't. So, he'll be fine. So all of a sudden, because you're doing fine, you're not included. So not that there's emotional scars.
I know.
But
I
again,
don't love that.
I was going to say, Michael, you don't seem like you're doing bad now, so maybe she made a good
Yeah,
decision.
there you go.
Yeah.
But it's all those issues. And then also when someone's getting older, you look at it also where all of a sudden you mentioned about getting along with that child or not, and all of a sudden they're being written out of the trust.
Yeah.
And that gets delicate because who twisted whose arm to be written out, then they want to
Yeah.
contest and making sure it's covered and it's in writing, maybe handwriting versus whatever, the instruction.
Oh, what about
so many things.
forgery? Do you guys see a lot of that?
Well, that's the other specialist you hire.
I don't. Yeah.
The handwriting expert, right?
Yeah, thankfully I don't. I don't really
Okay.
do litigation, and it's
Okay.
really, I don't see a lot of forgery. I mean, it does have to be notarized to the trust.
I've seen deed issues.
But yes,
Yeah.
it does come up, and
Quitclaims, deeds.
it's always shocking to me.
That's why title insurance is there. People say, what is title insurance? Why do I need it? Why do I have this? It comes
Yeah,
up.
yeah.
It does come up.
Yeah, no, I know because people go down to the court and they claim that, especially, and I know they, I don't want to say, well, they pry. Yeah, they pry on older individuals who are not necessarily looking at who's on their title report. And so they just kind of go in and the court doesn't know anything. They just timestamp and go, and then all of a sudden they're getting these letters like, oh, they take a loan out on this property.
Well, the first time it happens, it's easy to keep doing it because now that signature or that item is on record. It's easy to duplicate or a lot easier to do. Not that it's that easy, but people specialize in doing that, trying to mess you up.
And what about if you have a client and let's say, you have children from a previous marriage, and the father's older, wealthy, well-to-do, is married to a new woman, not the children's mother. Children's don't like the new woman, so.
That never happens.
Oh, they always like that person.
And so now
They're about the same age.
and so now the main person spouse, he dies, right? And then now the children want to contest a bunch of things that should be in their rights, whereas maybe in the trust or in the will, he has, it more for his current wife or his
Unless
previous,
they have the
most
separate
wife.
ones, they're not going to
Yeah,
know because
so
it's hers,
how
not
does-
his.
That's a really good point right
Like-
there. I mean, you're talking about marriages after the divorce, and the person that dies can have some control over who gets things. But if you die without a will or a trust,
Sure.
or it could be the kids or whatever and stuff. I mean, it's a situation that should be considered. I want to touch on another topic because the whole point today is to talk about what happens when the divorce is presumably over with, when we know it's not over with. Another scenario is support, child support and spousal support. So, after the divorce, there's obligations that have to continue. And, child support and spousal support have this thing that's called an Osser-Smith formula. And what that means is pursuant to this case and the code, the court can look at the seasonal and fluctuating income and make people pay above what the base support number is. And how do they come up with that? It's seasonal and fluctuating. Well, they gotta get forensic accountants or some kind of an accountant or a referee or somebody afterwards and meet with them, every 6 months or every year to come up with the tally, right? And stuff. So, after the divorce, there could be the selection of these people to do that as well. So, family law is kind of complicated, a lot more than what people think, and it's not over with, when we think it's necessarily over with. In most cases, there's some things that happen afterwards.
A lot of times you have a lot of gross income, and it's being expensed through the business, and income isn't there.
Well, now
Then that's where you got to start looking at.
Now we're talking about people burning their income in their business expenses, and that could happen after the divorce as well. It could be, let's reopen the forensic accounting and stuff. Yeah.
But you don't Uncle Sam, you don't show me unless we go bank statements and cash flow.
It's good to get a good forensic accountant before it's all over with.
Yep.
Actually, during the divorce, and hang on to that person because you might need that person afterwards as well.
Yeah. The gift that keeps on giving.
For some, yeah. Or
Yeah.
the gift that you have to keep giving.
Yeah.
So I guess, any final thoughts, Allie?
Oh my goodness. Well, I think that my hope is that on the other side of a divorce, people will see it as an empowering step, right? To take control of their finances. Part of that is to do your estate planning. So you probably want to, you definitely want to, if you don't already have a financial advisor, you probably want to get one. You want to make sure you have an accountant on your side, all these other professionals that we've been talking about, but I think those two we haven't mentioned. And then use this as an opportunity to do your estate planning. I know it's maybe the last thing you want to think about, but I think people will be happy to have it done. I always tell people that it's my job. I get really deep with you. It's sometimes it's hard. No one wants to think about dying, especially if you have little kids. But I try to make it as simple as possible, and then you can put it on the shelf, and you can just have the peace of mind that you did, what you need to do to make sure your family in this new unit, in this new scenario that you're in, is
your
protected.
new chapter,
Your new chapter.
your
Yes.
new life. That's what I'm going through right now, setting everything up. I have a 3-year-old, and it's just like, oh my God, I'm growing up.
Right. Yes. I know. I always tell people, even if they're in their 60s, I'm like, see, you're a real adult today because we're signing your documents. But then you can put it on the shelf. You know that it's done. We can come back in 2 years or 5 years or 10 years and revisit it. But at least you have the peace of mind of knowing that that you've done that. And then as part of that, and I've said it before, but I just want to say it again. Checking the title to your properties, checking your beneficiary designations on any of your life insurance, 401k, IRA plans. Really important, really, really important. And hopefully any good estate planning attorney is going to help you go through that, So those would be my sort of final thoughts that will make me feel good about people on the other side of a divorce doing.
Great. And Michael?
Well, I take offense, I'm 60. Anyway, but I guess whether you're refinancing to pull out money or just getting maybe a better payment plan and stretching out the payment for affordability, that's one aspect, or purchasing. And one thing we really didn't cover today, which is a very important part of lending, is a reverse mortgage when you have senior divorces.
Yes.
And we have individuals, because the qualification is for taxes and insurance. So allowing them to gain and keep the property in the scenario you gave earlier, as long as the taxes, which should be quite low, depending on when they got it, they're able to afford that through a reverse mortgage. If the equity position is strong enough based on their age, and again, the date of birth and the property address, what do they owe, we're able to do that. There's also reverse seconds now. So we're looking at a reverse mortgage for those 55 and over. Some loans are able to do that, 60 in some states, 62 in others. So that's really a good solution when you have a divorcing couple, when kids are involved. Usually at that age, they're not. In your case, on the same scenario you said about the kids the same age, sometimes that, anyhow, we won't go into that. But that's really important. But it's understanding the options that are available when the items are presented in their entirety. And eventually I find them. But if I find them earlier, we get better results. And I'll leave it at
Lori,
that.
these two are just incredible guests. You know, we just covered a broad spectrum of topics, and we got to get them back on our show so we can start digging into the little, just, you know, the reverse mortgage. We could do a whole
reverse
show,
mortgage.
show on
Yeah,
that, right?
just based on that.
So my conclusion of this is that people going through a divorce right from the onset should get a view as to what the big picture is, right? And we try to do that. We try to sit them down and say, look, you're right here at the beginning, and there's this process.
Yeah.
And that process includes not only the judgment of dissolution, but what happens afterwards. And understand that it's there. So don't think that you're going to be sprinting and getting to the finish line really soon. Be patient. Use good judgment, because we're going to need your good judgment to make sure that you survive your divorce and you thrive at the back end of it. And so that's my lesson today is think about where you're at in a point of time. Look at all the steps you're going to have to take. And don't forget about afterwards. Who are you going to have to hire? What are you going to have to do to make all this work?
Yes, and I would, just from, you know, today's show and our previous shows that we've done with the different guests that come on, it's very clear to me that I really need to start, or it should be suggested that to start early to really build your team and really, you know, make sure that they're there to help guide you through this process, because you're right. It's not like it's over like that. It's going to continue, and especially if there's children involved and their
Right.
children, and if there's special needs involved, and there's just so many things that, like me, I wouldn't think of those things, you know. And I'm so blessed that you guys are here, and we could share this with everybody, because if I didn't have these things, I know our audiences probably didn't know about a lot of this stuff. So. So I'm just so appreciative.
Thank you. Thank you for
Yeah.
joining
Thank you.
us.
Oh, it's our pleasure. I know it's a fire hydrant of information, but we can kind of control it.
Thank you, Allie, Michael, and Dawn, co-host over here, for coming on our show. It's been such a delight, and I know I've learned so much. And Dawn, I'll throw it over to you.
Yeah, thank you very much. I think that knowledge is power, and having you here helping us like this has just made it so much better for our audience, and we really hope to get you back on the show.
Thank you.
Divorce may close one chapter, but it opens up the door to an entirely new one. And the right planning makes all the difference. Thank you to Dawn, Allie, and Mike for sharing their expertise and insights. And if you think today's discussion resonated with you, then please subscribe to Talkin Divorce Pasadena on YouTube for more expert conversations that will help you move forward with clarity and confidence. And remember, you don't have to do this alone. There's always a way to protect what's next.